Hey, Joshua Phillips here with Churchill Mortgage, and we've got some great news today right here on the screen as Powell talks about that he may be cutting the Fed fund rate. It's August the 22nd, and today is a really good day. Now, before we get too far into this, I'm sending this out. I'm Joshua Phillips, Churchill Mortgage. I am part of the Phillips team, and I always like to say if you're working with the Phillips here at Churchill Mortgage, you're in great hands. Just some quick evidence here. Look here on this website that looks at our reviews. I have personally got 646 reviews from clients, 4.9 stars. Amy, who is amazing. Gosh, maybe everybody should just work with Amy. 807 reviews, 5-star. Can you imagine 800 people giving Amy 5 stars, saying on average that she is 5-star the best? And then Jesse, who's a younger member of our team, he's our son, 4.8 stars, 71 reviews. Hey, he does a great job too. He's just a little bit younger and newer into the business, although he's been here about 6 or 7 years. Anyway, all right, well, let's jump into the news today. So this is what we all been thinking about and waiting for. Is the Fed going to cut the Fed fund rate? Is the Fed going to cut the Fed fund rate? We've had a mix of reports about inflation, but today, Chairman Powell indicated in a speech he gave that they may be ready to start cutting the interest rates. Now, and you know what? The markets loved it. The Dow was up, 800 points today, I think, setting a new record. Bonds, which is what we like to look at, mortgage, 10-year Treasury bonds, down 0.76. That's actually a big move, down, putting the 10-year Treasury at 4.25. So that's really great news and a great indicator. So that's been, hey, pop the champagne. And now, I guess let me pause here and say, several weeks ago, I made a video that right before the last Fed meeting that says, does the Fed cut equal mortgage rate improvement? And that's got a lot of views. You can go back on if you're seeing this on our YouTube channel, it's just a couple videos back where I did a deep dive. And we looked at last year when the Fed cut the Fed fund rate over 3 different meetings, a full percentage point. But what happened? Mortgage rates went up 1%. Because of that, I'm not really, I'm not just thinking rates are going to go down. And if they cut 0.25% next month, that does not mean that mortgage rates are going to go down 0.25%. In fact, the saying that's been coming into my head today is buy the rumor, sell the news. I don't know if you heard that before with stocks. Buy the rumor, sell the news. And I think right now we're in the rumor phase. And that is causing mortgage rates to improve. We'll take a look at that in a moment. And Treasury yields go down. But it may be a buy the rumor, sell the news event. In other words, we may be seeing those rates improve, but that doesn't mean that when it actually happens that rates will improve further. They may actually pull back. All that to say, I have no idea what mortgage rates are going to do in the future. Neither do you. All right. Well, let's pull up here the mortgage-backed security chart, which is where we always look. Every professional loan officer in America, I believe, has a screen like this up looking at mortgage-backed security prices. All you have to know is green is good, red is bad, and the higher the security price, the better mortgage rates are doing. Now, this has been interesting. Let's pull it on back to a 6-month chart right here. So in the last 6 months, boy, you can see this line here, this R1 102.09. We have touched this line several times, but this represents kind of the best levels of the year, which we saw back before the tariffs got announced back in April. And then, of course, mortgage rates got worse, and we've been kind of finding our way back. Let's look at a 1-year chart. What does that look like for mortgage-backed securities? Well, we've talked about in the past that, we did have a nice rally last year that got cut short when the Fed, right around this time, we were a little bit better. Mortgage rates were slightly better than they are today a year ago. And they got, then the Fed cut the Fed fund rate. Mortgage rates got worse. We had a big sell-off in bonds. And so that's why we want to be really cautious and not overly optimistic about these Fed rate cuts. But as you can see, again, if you look at the last year, we are in a pretty good spot. And I just locked a client today. I won't say the rate, but I told the client it was the best rate I'd locked in the last couple of years. So, and that was on a 15-year, by the way. 15-year fixed rates are pretty fantastic. If you are in the market for a 15-year fixed, you're going to be seeing some really good interest rates. So, I would say just in general, we're still sitting in the sixes on a 30. We're moving down, though. We've been moving down a little bit, mid sixes, maybe low sixes, depending on what kind of closing costs and loan you're getting. And then we're seeing those 15 years slip into the fives. So rates are pretty darn good right now. So as I always say, if you have a specific situation, we would like to talk to you individually so we can get specific about rates available to you. We're also, of course, here to help you talk about getting pre-approved. I always include a link if you're getting the email for this, or you can reach out to us. You can go to churchillmortgage.com. You can search for the loan officer, and you can find myself, Amy, or Jesse. We are here to help you with your home purchase needs. If you're looking to refinance, we are starting to dip into that. Locked my first repeat client, someone I worked with in 2023. We just took them from an FHA 30-year loan down to a conventional 15-year loan with some really good improvement. So we're starting to see the seeds of a good refinance opportunity too. Anyway, take care. Reach out to us if we can help. For now, we're excited. Things are improving, and man, let's just hope it just keeps going. All right, take care. Bye-bye.